Welcome back, or welcome to the channel for the first time. Thank you for joining me. I'm gonna run through the 10 steps that I talk to all of my buyers about, and it's how to buy a home specifically for Los Angeles. We're gonna do 1 through 10, talk to lenders, get pre-approved, find an agent, start looking at homes, knowing when we found the right home, making an offer, offer strategies, contingencies and contingency removals, and then signing, funding, and recording the loan, which means you have actually purchased the house. And make sure that you watch all the way through, because I have some bonus tips scattered about that are going to be imperative to getting you to the right place to write the strongest offer to buy your next home. 10 steps to buying a home in Los Angeles. Step number 1, people get confused all the time and they think that they start with looking at a home, but that's actually step 4. Step number 1 is talking to a lender. You have to know how much money you can spend on a home before you go looking for a home. A lot of folks will go online and use a random mortgage calculator and say, oh, well, I'm qualified for this amount based on, whatever calculator they've found. What I have found with my clients is that almost all of them have been qualified for more than that calculator told them when they spoke with a lender. And that's because there are so many facets to what the bank looks at in order to approve you for a loan. So who do you talk to when you need to find a lender? Well, there's 2 categories. You are gonna go to both, not one or the other. You need to go to both. The first is a bank. And I tell all of my clients, go to the bank that you do your banking at. They will most likely have a mortgage department. And since you're already a client of the bank, they're going to want to keep your business. And a lot of them will offer relationship rates for getting a mortgage with them. That relationship rate could be something like reduced closing costs and all the way up to something like a reduced rate on your mortgage. All depends on the bank, all depends on the program. But the first place to go is the bank that you do most of your banking at. The second place to go is a mortgage broker. Mortgage brokers and banks do the exact same thing. When you go there, you're getting a loan. The difference between a bank and a mortgage broker is how they get you to that loan. Banks are pretty binary. It's how much you make, how long have you been where you work, what's your debt, kind of 1, 2, 3 from start to finish in a straight line. Mortgage brokers have a whole lot more tools to access, and they're able to find creative ways to get you that loan. Maybe you're an independent contractor and you don't have reportable taxable income. They can do bank statement loans. They can do asset loans. They can do, if you're buying a multifamily property, loans based on how much the rent from that property will generate. All things that are available to you in a creative setting with a mortgage broker that most banks will not offer you. All right, so now you've talked to both your bank and you've talked to a lender. The next step is getting pre-approved. The pre-approval process, say that 10 times fast, is about getting the letter that says that the bank has qualified you for a loan of X amount. And what you're going to want to do in this step is you're going to want to get your pre-approval from both the mortgage broker and the bank. However, here is a pro tip. In order to avoid getting your credit hit more than once by generating multiple pre-approvals from a mortgage broker and a bank, go to whichever one you want to first, have them run your credit, then ask them for the credit report and give that credit report to the other one. So if you went to the mortgage broker first, then take the credit report to the bank and vice versa. That way, you're gonna have an up-to-date credit report that only got pulled once, and both places will be able to issue you a pre-approval based off of that credit report. This is a power tip. When you are getting pre-approved, don't just get pre-approved. If you are working with a bank, this only works if you're working with a bank. Banks offer something that mortgage brokers don't. Banks offer the opportunity to be fully underwritten. The underwriting process is what you're going to go through when you have an accepted offer. So typically you get the pre-approval, we write the offer, your offer gets accepted, and then the bank goes to work qualifying everything to write you that loan. So that's the underwriting process. Being fully underwritten means you do that paperwork up front and the bank offers you a letter that says that you're not just pre-approved, you are actually approved for whatever that loan amount is. That piece of paper, being fully underwritten, means that you are as competitive as cash. You can remove your loan contingency because the bank has already guaranteed your money. Finding an agent. So how do you find an agent? Well, you may already have an agent because you might have already jumped to number 4 and have been looking at houses before you talk to any lenders. If you do not have an agent yet, the number 1 place to go are your family and friends. Go talk to them, see who they used, and if they haven't used someone in a while, see how they got to the person they got to. It's really easy and difficult to find an agent. Easy in the sense that if you don't know any real estate agents, you might not have that many friends because everyone seems to have their real estate license these days. But difficult in the sense that you don't know how they operate as an agent. So interview agents. Most people only think about interviewing agents when they're selling their home, but you need to interview an agent when you're buying your home because they are your biggest advocate. They are your fiduciary. They are the negotiator. So you need to ask them, what's their history with negotiation? How many deals have they closed? How long have they been in the industry? What are the tactics and strategies that they employ to win offers for their clients? How often do they write? How often do they win? What are their agent relationships? And a big question that not enough people ask is, do they know their sales to list price average? Mine is 96%. That is a 4% difference between what my clients pay and what the home was listed for. Meaning that generally my clients save 4% of the listing price when we have closed a transaction together. That is a winning formula and why my clients continue to come back and refer me to their friends because they know that I'm a strong negotiator and will get them that 4% savings. All right, you made it through the first 3 most boring parts. Now we get to the fun stuff. Now we start looking at homes. You've probably already started this because you've heard the term real estate, where people are just scrolling through Zillow and Redfin and Trulia and Realtor and all of these sites looking at homes. There's infinite amount of memes. And if you've ever turned on HGTV or one of those other channels, you've been there anyway. So let's look at homes. What is the strategy for looking at homes? Well, if I'm your agent, you've told me where you want to live, how big a home you want, how much you want to spend. I'm going to tell you that I hear you, but I'm also going to increase your price point, increase your geography, and I'm going to throw things into the mix that you may not have explicitly told me you're looking for. Why do I do this? I do this because there may be things that exist in homes just slightly outside your price point that you don't even know exist, that are going to be things that you really want in your home and wouldn't have ever found them unless we looked at those homes. Geographically speaking, most of my clients come in saying they want to live in one pocket, and I think probably 9 out of 10 of them don't end up buying in that pocket because they find another home that resonates with them elsewhere. So I always push the geography and I always push the price point. It's never to get my clients to spend more than they anticipate spending. It's oftentimes because there are homes that are mispriced and they're mispriced above what you're looking to spend. And so why not take advantage of that home being mispriced and negotiate? Get it down to the price that you actually want to pay, which is what happens for a lot of my clients. As we go through the search process, I believe strongly in seeing as many homes as possible. Real estate photography is one of the most deceptive games in town. And so there are homes that look amazing in photos that don't stack up in reality. And there are homes that do not photograph well that are actually quite incredible when you're standing in them. So I believe strongly in seeing a lot of homes at the outset of our search. And as we go through, tailoring it and curating it and whittling it down so that after only a couple weeks of seeing homes, we're really only going to see homes that are in that buy box, in that strike zone. We're only looking at homes that we believe you would actually want to offer on. And it takes seeing a lot to get down to that target point where we know that when we walk into a home, we're walking in with the mindset of, we would write an offer on this. Let's figure out if we're not going to write an offer on it, rather than throwing crap at the wall and figuring, well, let's just go look at everything and hopefully we find something we write an offer on. If that's your agent's strategy, go find a different agent. So we've been looking at houses. How do we know when we found the right one? Well, statistically, you will know the home that you want to write an offer on within the first 8 seconds of walking into the home. Homes are an incredibly large financial purchase. They are an exponentially larger emotional purchase. And that's why that statistic exists. It's a weird EQ statistic to say that within 8 seconds, you know the home is for you, but you do. Every single person that I have ever worked with has walked into the home, and within that, I'd say for me, it's probably about 12 seconds, I can see it on their face. Their shoulders drop, their eyes light up, and they are already envisioning themselves in that home. It's that moment that we start writing offers. We have to get to that feeling. You'll see other homes that resonate with you. We will go to other homes that you feel really good about. We may even write an offer on them, but the one that you win is going to be the one that you have that emotional connection with in those first 8 seconds. Now we get into my favorite part. So we've found the home that you connect with. It's about writing an offer. And here's where I, as your agent, really get engaged. This is when we go into the next gear. My job, in order for us to write a strong offer, is to get as much information as humanly possible. We're going to want to know, why is the seller moving? Where are they going? Do they need any extra time? Are they looking for anything particular? Do they want to leave anything behind? Or is any furniture for sale? Do they, is there a parrot that comes with the house? And you'd be surprised, people do leave pets that come with homes. That's for another time. But basically, when we're ready to write an offer, we have to get as much information. We have to know how many other people are at the table. How competitive is the landscape? Are we going to get countered? That's a whole other story for a whole other time, which we will go over about writing offers and counters and otherwise. But for this, we're writing an offer where it's about getting as much information as humanly possible. And then we can strategize what kind of offer we want to write. The exercise that I give to all of my clients that has prevented them from making poor emotional and poor financial decisions is this one thought exercise. I tell all of my clients, come up with a number that at $1 more, you don't care who buys the home. And that's because we are most likely going to need to go to that number to win the home. Right now, the market is incredibly competitive. It is multiple offers left, right, and center. If you don't have that number that you're willing to lose the home over, then it puts you in a position to overpay, to overstretch, to get into an uncomfortable position. And for my colleagues who have worked with clients that get into that uncomfortable position, escrow is very difficult. And if it closes, there's a lot of regret and remorse. And if it doesn't close, it's because they felt like they paid too much and wanted to exit the transaction. So having that number that at $1 more doesn't matter who buys the home will prevent you from overspending and prevent you from having buyer's remorse as we move through the transaction. Here's a little bonus insight. There is this kind of stigma around a 20% down payment, or that a higher down payment is better or otherwise. This is the reality, at least in California, around the finances of a transaction. It doesn't matter if I put 1% down and somebody else puts 99% down. If we're both offering $1 million, at the end of the transaction, the seller's only getting $1 million. The psychological component of down payment has been blown way out of proportion, in my opinion. Just because I'm putting 5% down and somebody else is putting 35% down, if we're offering the same amount of money, doesn't change anything. The seller's mentality is that they think that a higher down payment affords them more security in the transaction because, this person's putting more money than this other person is putting down. The reality is everyone has the same right to cancel the transaction. There's no higher likelihood that somebody with a lower down payment is going to cancel over someone with a higher down payment. It makes absolutely no difference. So don't think that you need 20%. You can go in with whatever amount you feel comfortable that makes your loan affordable. And don't let anybody tell you otherwise that a higher down payment is going to win you the home or put you in a better light to your seller. It's your agent's job to negotiate the strength of your offer, not let the numbers speak for themselves. So we found the home, we wrote an offer. Congratulations, your offer is accepted. Now what? In California, there are 3 main contingency periods, and they are contractually stipulated to be 17 days each. So in our offer strategy, in a different video, I'll talk to you about what we do regarding those timelines. For this, let's just talk about the contingencies. Those 3 contingencies are the inspection contingency, which means not only the physical inspection, but if you're buying a condo or a townhome, it's also the informational inspection period. Happens for single family too. The appraisal contingency and the loan contingency. The inspection contingency is your due diligence time. That's to get in and do a general inspection, termite inspection, sewer inspection, roof inspection, fire inspection, mold inspection, whatever kind of inspections you want to do. There's an entire list of inspections that I give to you when you're writing the offer for you to choose from, and then we run them through your house. Those are all costs that you as the buyer pay for. That period of time is to figure out whether or not there's anything having to do with the physical characteristics of the home or something you learn based on what the seller has told you about living there that you're not okay with. And if anything comes up that you are not okay with, that is not able to be remedied, and we have not removed our contingencies, then it gives you the exit policy to leave the transaction and to receive your initial deposit back minus some of the escrow fees. All things that we can get into later, but that's the inspection contingency. The appraisal contingency states basically that the home needs to appraise for what you are paying for it. So if the home is $1 million and you've offered $1 million, then the bank comes out and says, yes, the home is worth $1 million. Or they say, no, the home is only worth $950,000, in which case we have to renegotiate or we leave the transaction. Or in the rare case, the bank comes out and says, actually, the home is worth $1,100,000, and congratulations, you just made $100,000. Sounds like crazy talk, but it actually does happen. I have had clients who have had their homes over appraised and they make money day one. The loan contingency is the third and final contingency, and they run successive: inspection, appraisal, and loan. The loan contingency basically states, in California, the purchase agreement says that you're getting a loan for this amount of money and the interest rate not to exceed this percentage. Typically, when mortgage rates were not as volatile as they are at the moment, you would put in, that didn't really come into play. You put in a random number. If mortgage rates were 5%, you would say, I'm not going to get a loan higher than 6%, in the off chance that mortgage rates shot up during the 30 days of the transaction. Today, where we stand in the volatile mortgage market, that little clause in the transaction is super important for you because mortgage is all over the place. Just in the last week, it's risen almost a quarter of a point. So the loan contingency says the bank is going to give me $1 million. My agreement with them is to get that money at 6%. But if mortgage jumps to 7%, I'm not going to do it, and I have the right to leave the transaction. So that contingency right now is incredibly important as a backstop safety for folks that are trying to buy a home in a volatile mortgage market. Those three contingencies need to be removed. They're all active removal contingencies, which means that we do signed and countersigned documents to remove the contingencies. Once all of those contingencies are removed, that is leading us into the home stretch. Now, I want to make a note here. These contingencies are your exit policy and they're your safety net in California. I don't know what it is in the rest of the state and the rest of the country, so I'm only going to talk about California specifically. When we open the transaction, you're going to owe 3% of the purchase price. That's called your initial deposit. That is the only money that's in jeopardy if anything goes wrong in the transaction. But I need to further qualify anything going wrong in the transaction. That money is only in jeopardy if you have removed all of your contingencies and you then want to cancel the contract. That's when the money becomes in jeopardy. But at any point up to that point, right? You've removed inspection contingency, the appraisal doesn't come in, we can't renegotiate, so we're gonna cancel. Or we clear the inspection, we clear the appraisal, but the loan doesn't come in, we can leave the transaction. At any of those points, canceling on inspection, canceling on appraisal, canceling on loan, we cancel the transaction. We walk away, it didn't work for one reason or another. You are returned your 3% minus some prorated escrow fees. But please know your money is not in jeopardy unless we get to the very unlikely scenario of you removing all of your contingencies and then wanting to cancel the transaction. We've made it through all of the other parts, 9, 10 other pieces to this puzzle. We're now at the home stretch. The home stretch is about the last 5 days in escrow. So for a 30-day process, we're at like day 25. There are 3 pieces to wrapping up this transaction: signing the loan, funding the loan, and recording with the state. For some reason in Los Angeles, we cannot do those 3 things in the same day. We can sign and fund the loan in one day, but we have to record the following day. Once we are recorded, that's when I give you the keys. That's when we pop champagne. That's when you actually own the home. That's it. That's all the administrative processes. That's finding a home, everything. The fastest I've ever done this with someone was 10 days, and the longest I've ever done it with someone was 27 months. So there's no right amount of time. We find the home when we find the home. We write as few as one offer and as many, I think my most is about 36 offers for one family looking for a home. So don't get discouraged. It's a very difficult process. It's a big financial decision. It's a big emotional decision. And I'm here to help you. If you have questions, please leave a comment. If you found anything in this video interesting, give me a thumbs up and subscribe, because I do more videos like this and I want to help you buy a home. I'm going to do a video on selling a home, so make sure you stick around for that. I appreciate you giving me the time, and I look forward to seeing you in the next video.